usually when there's a major short-term movement with a larger candle and/or gap. Charts often settle down relatively quickly, with much weaker movements in narrower ranges, commonly accompanied by decreases and plateaus in ATR. When more decisive directional movement takes place, it won't be unusual to see ATR remain at relatively low levels, but there can usually be a slight bump in ATR, even when there's only a minor to moderate break out of a developing reversal range. Now let's break down these characteristics step by step as it takes place on the chart, except in this case it's in the context of price suddenly jumping up. Following the normal spike of ATR, something interesting is happening. While price does its more normal behavior of remaining relatively range-bound, ATR hasn't undergone a typical drop following a noticeable price gap on the chart. Instead, it's remained almost unchanged even after almost 2 weeks. Here's something even more unusual, with another sharp increase in ATR. This indicates prolonged instability in the market. Then, as there's natural support filling in the gap for a minor rebound, ATR soon plateaus for another brief period of relative stability similar to the few days after the gap up into the second half of April. And although some of these recent red candles have been quite large in relation to the candles around them, looking at the ATR from the time span of at least 1 month, we can see it continues to be quite flat with only a gradual rise, despite some of these more moderate-sized drops into May. Then as time goes on and persisting support keeps price up around the 130 area near the gap fill region, we can see that in the broader context, it's still been a similar situation to the first case we looked at with the gap down. Overall, price has been relatively range-bound and directional movement has been quite weak for time spans beyond 2 weeks. The only main difference was volatility remaining at higher levels for a longer time after the initial gap up. That's why it's also important to take note of the broader context and other features, such as the gap fill region around the 130 area. Then with this newest gap, it's a more typical situation with a relatively quick decrease in ATR as price begins moving into a narrower range. And when a reversal progresses to get back over the initial gap down area, there are still some periods where ATR briefly bumps up slightly, though overall from a longer term view, price and ATR values are not significantly changed from the start of August to the beginning of September. Again, here's another similar situation, except it's just a larger movement from one big candle and not a significant gap. ATR still drops and flattens as price tightens into a smaller range, and then there's a slight bump in ATR as there's more decisive directional movement, which in this situation is the continuation of downtrend development rather than the progression towards a bullish reversal. These characteristics are especially applicable to the intraday time frame, particularly in the stock market, where sudden larger movements take place on a regular basis, usually near opening and closing hours,